Hello everyone, this is the weekly review. Today we are analyzing the dollar index at 100. Let's get started. There has already medication of the monthly structure here. An unworked monthly demand remains. We have already reacted from this level plus a structure break plus the 0.5 Fibonacci zone. There is a reaction, there is liquidity. There was a local liquidity collection here. There was a local liquidity collection here. So we are now in our zone. If we switch to the 1 hour time frame, as you can see, we collected liquidity here. There is a rejection block. There is liquidity. We left it, already removed it. So what do I see here? A reaction from the 0.5 Fibonacci level, with a subsequent move downwards in closing the gap. What could possibly be the next scenario? We fall down, mitigate our demand. Either we build liquidity by removing all compression and expect a reversal from the 88th Fibonacci zone with a subsequent move downwards and an update of the historical high. Let's move on. Euro New Zealand dollar, 1 week time frame. On the 1 week time frame, we have structure break. This is our weekly boss. This is our monthly demand. This is our weekly demand. So what can we assume here? After this impulse, a correction, mitigation of the Fibonacci level in the 0.5 zone. A global reversal can be expected here. Let's switch to a smaller time frame. Structure 1 day, daily demand, mitigation of the daily order block that took liquidity. So this is a strong level correction into our short TT with subsequent covering of the daily gap and a move downwards as we are currently at the upper boundary of our ascending channel. British pound, New Zealand dollar. By the way, we provided this signal in our VIP community. Don't forget to subscribe, like, and comment. Here is the entry into our demand zone, liquidity collection. And so what do I see here? Entry into our demand zone, reaction from the 705 zone according to Fibonacci, liquidity collection. There is already, we call this a market structure shift. Let's move to a smaller time frame. So if a major player has already initiated an upward movement, this is our break. This is our demand. But we can also come to our 0.5 demand. So be careful with this and manage your risks. Next, I indicated where to catch longs and up to where. There is compression that we left. That is, within this movement, we didn't take anything off. Absolutely nothing. Only here. What do I anticipate? After this impulsive movement, I anticipate a correction to our 0.5 zone with a complete covering of the imbalance, followed by a downward exit. Since all of this is in its most comprehensive form, compression. And plus, we are now, if this is conditionally a range, we make a new deviation and gather all the compression and come at least to our 0.5 zone to test this volume. Have a great day, everyone. Use a stop loss. Don't forget to subscribe, leave a like and comments.